A bank strong room, probably more than anything else, sums up what most people think banking is about. It symbolizes, after all, a number of qualities that are vital to the banking image. Safety, security, and of course money. Lots of money. But money stored in bank vaults is a pretty useless asset. It doesn't earn anything for the bank. Banks don't want your money or mine in order to store it. They want it because other people want it and are prepared to pay interest to get it. Banks then, as private firms, need our money to carry on what is the main business of banking, lending money in order to make a profit. In all, there are about 50 banking firms operating in Ireland at the present time. All but 8 of them, however, are fairly specialised firms, dealing exclusively with such things as financing exports or long-term lending to industry. For most people, banking means the familiar 8 banks, 6 Irish and 2 British, that operate extensively throughout the country with a branch network. These differ from other banks in the first place because they are comprehensive rather than specialised, and offer all kinds of financial services. Secondly, they all operate a cheque account system. All 8 banks are members of the Dublin Bankers Clearing Committee, an arrangement by which the banks agree to accept each other's cheques and clear accounts between themselves, thereby making the familiar chequebook as good as money itself. The oldest of the Irish banks is the Bank of Ireland. It was founded in 1783 with more or less a monopoly of banking. Its first premises were in Mary's Abbey, near the Dublin Quays. But since 1803, it's occupied the old Irish Parliament building in College Green. It wasn't until much later in the 1820s, when its monopoly position was abolished, that the other banks started to appear. One bank very much involved in the banking industry, but not itself a commercial bank, is the Central Bank. For many years, the Central Bank was limited to being little more than a note-issuing bank. It played little part in controlling the credit activities of the commercial banks, because their credit policy was based to a considerable extent on the amount of surplus sterling these banks held abroad, over which the Central Bank had little control. This didn't matter so much while Ireland was economically undeveloped. But in recent years, the whole economic climate has changed. Nowadays, everyone wants money, or the next best thing to it, credit. The government wants it for its capital programme, the industrialist for his new machinery, the individual for his new car, and so on. It's not surprising, therefore, that moves have been made to strengthen the central bank and set up a money market, where some of this money held abroad by the banks can find investment outlets in this country. At the same time, the central bank has to be strengthened, because there isn't enough credit that can be created to satisfy all demands, and an indiscriminate expansion of spending power can create